everyone. It's my pleasure to be here today. With me today is Steffen Riediger. He's our director for power derivatives and the business development unit on EEX side. Unfortunately, wasn't able to join in person, but it is at least here on a virtual basis, and he will kick off the presentation from the first part. And I'm more than happy to hand over to Steffen for his introduction.
Thank you, Lukas, and indeed a very warm hello here from Germany. It's a true honor to be invited to the MCX Energy Conclave today. EEX is a global commodity exchange, and we are operating commodity markets around the world. I'm proud to say that EEX is the #1 power exchange worldwide for at least the past 5 years. We've heard about geopolitical tensions and the importance of risk management. This is exactly what we have seen not only in Europe, but around the world in power markets over the past 2 or 3 years. In 2022, European power prices have reached a level that was 10 times higher compared to the record levels observed in the decade 2010 to 2020. So you can see to what kind of risks, price risks, market participants have been exposed, but also counterparty risks that emerged.
Thank you very much, Steffen. The first step that I would like to take is to do a deep dive into our power derivative markets. Today with the 3 key trends on the European power derivative markets, which I would like to share with you today. The first being the trend towards continuous clearing, which is a trend which is with us from the very, very beginning, where we saw a constant movement of volumes from the OTC and uncleared market towards exchange traded, towards exchange and cleared trading activities. The second big trend is the opening up of markets. I mean, in Europe, not the liberalization of the different countries does not happen now at the same time. A few start a little bit earlier, like Germany, others started a little bit later. Nevertheless, at some point, the spot markets evolved and trading in respective spot markets took place. At some point, the markets matured and wide enough in order for the derivative markets to evolve as well. Then there's of course then the third pillar, which is the whole discussion and the development around the renewable energy production or electricity production in Europe. We have still a lot of projects and increased development in this area. In particular, the German power market has reached a level of liquidity and maturity, which makes it now attractive for high-frequency trading companies, which using sophisticated trading algorithms in order to participate on the markets. When we're talking about the group of the market participants on EEX, we tend to kind of like classify them into 3 groups. The one being clearly the companies which have a physical background, so energy producers and consumers. Then there's a group of commodity trading firms, professional trading companies who specialize in commodity trading. And on the third side, we have the financial institutions, investment banks, which are looking for portfolio diversification possibilities. And all these different groups of clients that are entering the market, being it physical players, financial players, supportive brokers, trading companies, coming from different angles and different countries, they are all together creating something that we call network effects, right? Different strategies create trading opportunities for each and others and have helped our markets to grow further beyond actually the scale of the physical underlying markets, which is a very important key of success from our perspective. With regards to how our futures work, our products are purely cash-settled power futures, so there is no physical delivery of electricity attached to a future position that is held, and they are always designed in a way that they're mirroring the spot market price of a very specific region, where there is a spot market which runs a day-ahead auction. And our contracts are designed as contracts for difference, which will actually provide a cash compensation between the price that was agreed in the future and the average spot market price for the respective period. And this cash compensation will not be paid out at the end of the holding period, but on a constant daily basis via the so-called variation margin. So a daily cash compensation based on the day-to-day value for the future that is evaluated by us on the exchange. For us in Europe, actually, one could say that, let's say, the regulatory framework can be grouped in 4 groups. On the one hand side, we have the exchange supervisory, which is governing the setup of assets and exchange and lays out the rule under which we operate in Germany. Then there is, of course, the energy regulation, which is listed here under ASA, which is the authority for the cooperation of the local energy regulators, because we have always a regulation body on the EU level, but then also in Germany and France, so on every local level as well. Then there's the financial market regulation, which is governed by ESMA, which is the European Security Market Authority. And then there are, of course, a lot of additional working groups and bodies, in particular at European level, in which we are staying in close cooperation.